Welcome to the Economist in Your Ear podcast. What if the future of artificial intelligence, and maybe even your own retirement savings, depends on launching server farms into the freezing vacuum of space?
Yeah, I mean, it sounds like an opening scene from some cyberpunk novel,
Yeah.
right? But as of right now, it is literally the defining technological and financial reality of our time.
Exactly. So today we are looking at a piece of reporting titled The Value of SpaceX Rockets on its Stock Market Debut. And the mission here is to critically unpack this historic initial public offering.
Right, and to challenge that staggeringly high valuation it achieved. Plus, we really need to explore the wild sci-fi sounding premise that actually justifies the whole thing.
For sure. So whether you are, a hardcore tech enthusiast, a market skeptic watching from the sidelines, or just someone holding a standard index fund in your retirement account, this event fundamentally shifts the landscape of commercial space and investment.
Yeah, the boundaries of commerce basically just moved a few hundred miles straight up.
Yeah.
And you are financially involved in it, whether you realize it or not.
Okay, let's unpack this. Because before we even debate the feasibility of space-based AI, we need to look at the financial reality. I mean,
Yeah.
this was the IPO that analysts thought would never actually materialize.
Right, it's kind of a myth for years. But then on June 12th, 2026, Elon Musk actually rang the Nasdaq's opening bell from Texas,
And SpaceX sold 5% of its shares at $135 each. That maneuver raised $75 billion in a single day.
which comfortably makes it the largest IPO in history. It also instantly propelled Musk over the line to become the world's first trillionaire.
Oh, wow, just off the opening price alone.
Exactly. But the opening price was only the beginning of this story. The first day of trading closed at $161 a share, which is a 19% gain.
Right.
And that closing price slaps a $2.1 trillion valuation on the company.
Wait, 2.1 trillion?
Yeah, 2.1 trillion.
Okay, but here is the stark financial reality behind that huge number. Because SpaceX recorded $18.7 billion in revenue last year, which sounds great, but they actually operated at a net loss of $4.9 billion.
Yeah, almost a $5 billion loss.
So, to put this in perspective, imagine you are house hunting. You find an incredibly expensive mansion, but when you pull up to the driveway, the house is literally on fire.
The roof is completely caving in.
Right, smoke is pouring out the windows, and it is just bleeding money. And the seller looks at you and says, "That will be $2.1 trillion, please."
And their only justification is that, well, eventually they plan to move the land the house sits on to a much better neighborhood in orbit.
Exactly. So why on earth is the market ignoring a massive multi-billion-dollar loss to grant this kind of valuation?
Well, your analogy captures the absurdity, but we have to adjust it slightly. It is not just a burning mansion. Investors are buying it because they believe the current owner runs the only construction company capable of building anywhere in that new orbital neighborhood.
Ah, okay, I see.
And just to be clear, exploring these financials is strictly an analysis of market mechanics and valuation. This isn't investment advice.
Of course not.
But when institutional buyers accept this $2.1 trillion price tag, they're making a very specific three-pronged bet. First, they are assuming an unfathomable amount of future revenue will be generated in the space economy.
Right, massive future money up in space.
Second, they are betting that this revenue will be driven specifically by artificial intelligence. And third, they are betting entirely on Musk.
Because of how he structured the IPO, right?
Yeah, he structured it so he retains absolute dictatorial control over the company. The market is basically pricing in the belief that his specific autocracy is the only way this vision gets built.
Here's where it gets really interesting, though. To understand why anyone trusts that three-pronged bet, we have to look at the one division of SpaceX that is actually printing money today.
Right, Starlink.
Because we have to ask, is Starlink laying the fiber optic cables of the 21st century where no one can tax them? Or is it just a glorified toll road funding Musk's interplanetary hobbies?
Well, if we connect this to the bigger picture, Starlink really proves the underlying economics of modern spaceflight. To understand their profitability, you have to look at their hardware dominance first.
Like the Falcon 9 rockets.
Exactly. Last year, SpaceX launched more than twice as much mass into orbit as every other company and country on Earth combined.
Wait, combined? That is insane.
It is not just a marginal lead. It is an absolute monopoly on atmospheric exit. And this is entirely driven by those Falcon 9 rockets, which, have been flying since 2010.
Right, and they are partly reusable.
Yeah, by landing the first stage and flying it again, they completely stripped away the largest capital expense of space travel.
So they stopped throwing the airplane away after every flight. And the seam of gold they found with that reusable hardware is obviously Starlink.
Yeah, the sheer scale of Starlink is what justifies the market's initial patience here. I mean, they have over 10,000 satellites currently in low Earth orbit. Over 10,000. And that constellation beams internet to 12 million individual customers. Plus, they serve commercial airlines, global shipping firms, and, through their Starshield subsidiary, highly classified government and military agencies.
Wow. And the financials for that specific arm are pretty wild, right?
They really are. While the broader company lost nearly $5 billion, Starlink itself brought in a $4.4 billion operating profit last year.
Which is up from $2 billion the year prior.
Right, so they basically have a monopoly on the delivery trucks, and they own the most profitable cargo.
But dominating launches and satellite internet was really just phase one, wasn't it?
Absolutely. The real strategic moat is vertical integration. Because SpaceX owns the rockets, they launch their own Starlink hardware basically at cost.
Right, whereas competitors like Amazon's Project Kuiper have to pay a massive premium to get their satellites into the same orbit.
It is the equivalent of owning the only shipping port and charging your competitors triple just to dock. That structural advantage lets them build an insurmountable monopoly in low Earth orbit.
But still, even a $4.4 billion profit on internet services does not justify a $2.1 trillion valuation. I mean, it just doesn't.
No, it doesn't. The entire premise of this IPO hinges on solving Earth's single biggest technology bottleneck.
Which is the physical constraints of powering artificial intelligence.
Exactly. This is where the narrative shifts from aerospace engineering to the actual limits of global computing infrastructure.
Because down here on Earth, the major tech giants, the hyperscalers, they are forecast to spend an astonishing $800 billion this year alone on data centers.
But they are hitting a massive physical wall. I mean, we are facing severe electricity shortages.
Right. The power grids simply cannot handle facilities that draw as much electricity as a small city.
Exactly. And there are machinery shortages for heavy transformers, too. Not to mention the political blowback.
Oh, the local opposition is huge.
Yeah, local communities do not want these massive, loud, water-consuming facilities in their backyards. Several states are even looking at outright regional bans on new data center construction.
Which leads us directly to the orbital solution. Because space offers two things in absolute abundance: plentiful, intense, unfiltered solar power, and zero neighbors to annoy.
That is true. No zoning laws in space.
Right.
And the tech specs they outlined just days before the IPO revealed the sheer scale of this pivot. SpaceX is planning to launch customized AI satellites, where just one single satellite equals the computing power of a conventional high-density data center rack.
I saw those blueprints, actually, and the physical footprint is staggering.
It is massive. To power that single rack, each satellite requires two massive solar panels, with a combined wingspan of 70 meters.
70 meters. That is roughly the wingspan of a Boeing 747, isn't it?
Yeah, and because they're operating in space, they have to manage the heat. So each unit is equipped with two 10-meter-long radiators.
Oh, wow.
And the business infrastructure is already moving to support this. SpaceX purchased xAI, which is Musk's loss-making artificial intelligence lab, back in February 2026.
Right. And they already have multi-billion-dollar deals with Anthropic and Google to rent terrestrial capacity at their Earth-based Colossus data center.
Plus, production of these new AI satellites starts next year. They are breaking ground right now on a massive terafab factory dedicated exclusively to building custom AI chips meant for orbit.
Okay, but I have to push back here. Are we seriously talking about blasting servers into space to generate AI? I mean, the logistics of maintaining servers on Earth are incredibly difficult.
They really are.
Drives fail, cooling pumps break, dust gets into the chassis. IT technicians are constantly swapping out hardware down here. How do you reboot a frozen server or swap a burnt-out chip when the rack is hurtling through the vacuum of space 300 miles above your head?
You can't, really.
Exactly. And furthermore, what about data latency? Sending petabytes of training data up to orbit and back down to Earth has to violate some basic laws of physics regarding the speed of light and bandwidth.
Well, what's fascinating here is how casually this monumental engineering pivot is being framed. Musk has publicly stated that they are utilizing technology they already developed for the Starlink constellation.
Right.
And he even claimed on an earnings call, "We don't think this is a super hard problem."
Not a super hard problem. That is quite a statement.
That framing reveals an incredible amount of hubris. They are treating orbital infrastructure as a simple plug-and-play solution to terrestrial zoning laws.
Which it definitely is not.
No. Take the heat issue you mentioned. Space is cold, yes, but it is a vacuum. Down on Earth, servers are cooled by convection, fans blowing cold air over hot metal, allowing the air to carry the heat away.
Right. But in a vacuum, there is no air.
Exactly. The only way to dissipate the massive thermal output of an AI server up there is through thermal radiation, literally emitting the heat as infrared light.
That sounds incredibly inefficient.
It is, which is exactly why those 10-meter radiators are required.
And you are spot on regarding latency, too.
Because of the sheer distance. Well, low Earth orbit is close enough that a simple ping might rival cross-continental fiber. But pushing the sheer volume of data required to train a large language model up through atmospheric interference, that is a total bandwidth nightmare.
So what does this all mean? We have this grand pitch like a sky filled with 747 sized AI data centers. But does the reality hold up to the promises? Or is the market just buying into a sci-fi illusion?
This raises an important question about the structural vulnerability of the whole enterprise. The skeptics actually have very strong, mathematically grounded arguments here.
Because orbital data centers have never been tried before.
Right. First, it has never been done. Second, you cannot launch a constellation of 70-meter satellites on the Falcon 9.
Oh, interesting. So the current workhorse rocket is too small.
Exactly. It's too small and only partially reusable. The entire economic viability of space-based AI relies on the Starship mega rocket.
And Starship is designed to be fully reusable and carry vastly heavier payloads at a fraction of the cost, right?
Yes, but Starship is already severely behind schedule.
So, if Starship suffers further delays or requires fundamental engineering redesigns, doesn't this entire $2.1 trillion house of cards just collapse?
From a traditional risk assessment perspective, absolutely yes. And add to that the fact that the broader terrestrial AI market is currently quite jittery.
Right, with investors questioning the long-term profitability of these massive language models.
Yeah. If the demand for AI computing cools down even a bit, the need for space-based servers basically evaporates.
But we have to balance that skepticism with their actual track record, don't we?
We do. And the market is heavily weighting that historical context. Think back to 2008. Experts said a private company launching a liquid-fueled rocket into orbit was impossible. But SpaceX did it.
Right. And landing a booster rocket vertically on a drone ship in the ocean. People dismissed that as a parlor trick that defied economic logic.
But today, they do it twice a week. And remember, during the early 2000s, an entire generation of low-orbit satellite internet companies went spectacularly bankrupt.
Yeah, they pretty much all failed. But Starlink survived and became wildly profitable.
Exactly. So investors are factoring in what you might call the Musk exception. It is this ingrained market assumption that because he has defied the odds and embarrassed established aerospace experts before, he is somehow immune to the fundamental laws of physics and economics this time.
Which brings us to a twist that affects almost everyone listening today. Because you might hear all of this, the delayed Starship, the thermal radiation challenges, the $2.1 trillion price tag on a company losing nearly $5 billion a year, and think, wow, this sounds incredibly risky. I'm glad it is not my money.
But the reality is, it probably is your money.
Exactly. It's like finding out your safe, completely predictable mutual fund has secretly strapped you into the passenger seat of an experimental rocket.
Yeah, the mechanics of how this public debut is structured mean the implications reach way beyond venture capitalists and tech insiders.
Right. Because of the sheer historic size of this $75 billion raise, several big financial indices actually changed their rules to allow the early inclusion of SpaceX's stock.
And to understand why that is so consequential, you have to look at the mechanics of passive investing. Major asset managers offer cheap, popular funds that simply track these indices algorithmically.
So they don't have human analysts sitting in a room debating the feasibility of 10-meter space radiator?
No, not at all. If a stock is added to the index, the fund's algorithms are automatically required to buy the shares to match their target weighting.
So, the moment SpaceX was included, a tsunami of automated passive retirement money flowed directly into the stock at that $161 share price.
Exactly. And let's not forget that retail investors, everyday people using standard brokerage apps, they were allocated an uncommonly high proportion of shares in this specific IPO compared to the usual institutional whales.
Which is fascinating, but also kind of terrifying.
It creates a profound irony within the financial system, I think. Passive investing in index funds were designed as conservative tools to minimize risk through broad market diversification.
Right. They are supposed to be the boring, safe way to build wealth over 30 years.
Yet because of these early inclusion rules, The most radical, high-risk, futuristic vision currently operating in the market is being automatically funded by conservative retirement accounts.
That is wild.
The financial system has basically bypassed standard risk assessment models. It is inextricably linking the mundane reality of pension planning with the absolute extreme frontier of space-based artificial intelligence.
So whether you view these orbital data centers as a fever dream or a brilliant blueprint for the future, a portion of the everyday retail investor's wealth is now tied directly to them.
You are financially on board this rocket, like it or not.
Which leaves us with this final thought. Consider the irony that humanity's greatest expansion into the cosmos might not be driven by a noble quest for scientific exploration or some philosophical desire to become a multiplanetary species, but by the desperate commercial need to find a place cold enough to cool down AI server farms. Thanks for listening. Follow us for daily insights into world affairs, and don't forget to like, comment, and share.